So good day, everyone, and welcome to today's class. And in today's class, we are going to be talking about what? We are still going to be talking about group cash flow. And if you remember, when we started this particular topic, I make mention that what group cash flow is divided into what? Group cash flow is divided into two. We have that of what? We have that of the acquisition, and we also have that of the what? That of the disposal. Good cash flow is divided into how many? It is divided into two. Please don't forget. When you are given a question on what? On group cash flow, just have the mindset that once you know that, oh, the requirement is what? The requirement is that you should prepare the consolidated what? Statement of what? Statement of cash flow. Then try as much as possible. Let's flashback and ask ourselves that this particular what now, this particular cash flow is on what? Is he on acquisition or is he on what? Is he on disposal? Please don't forget that. Is he on acquisition or is he on what? On disposal. Once you are giving any question on what? On cash flow, make sure that we're able to give answer to this. Which type of cash flow is this? Is he on acquisition or is he on what? Or is he on disposal? So whatever it is, you should be able to what? You should be able to determine that. Okay. So let's now what now? Let's now go now. Like the question that we have here, I think we're able to solve question 1. And I think we're able to solve question 2 as well. So question 3 is on what, which I don't really know. Okay, I'm looking, there was no disposal. Okay, so let's start with this word now. Let's start with this question 3. Question 3 is on disposal. And you can see they say DF disposes entire shareholding in what? In SD. DF disposes what? Is entire shareholding in what? In SD. So that means that this particular question is on what? Is on disposal. And that is fine. That is what we are looking for. So now you can remember if it is on acquisition, we are going to be adding. If it is on what? If it is on disposal now, we are going to what? We are going to subtract. Okay, it's a very simple process. Okay, so please hold on. Let me get something information right. Please just have a look at this question. Just be reading it. This is the additional information. Please just go through everything while we start the working now. Please. Just read the additional information, please. Really like all the additional information. Let me get some things. So there was no disposal of what? Of property, plant, and equipment during the year. Depreciation charge in arriving at what profit was 3.1. DF disposed the entire holding in what? In SG on the 1st of October 2012 for 8.1. And it acquired what? 100% of what? Of SD in what? In 1993, and the associated goodwill on this acquisition has been written off by 2010. And when we say something is what is written off now, so that means that the goodwill account now is what? The goodwill account is what? Is 0. The goodwill account is what? The goodwill account is 0. Okay, the gain on what? The gain on disposal, the gain on what? The gain on disposal of SD has been netted off against the what? The administrative what? Expenses. It has been netted off against the administrative expenses. And the tax charge on the gain is included within the group income tax expense. DF made no other purchase or sales of investment in the year. This is the carrying amount or the carrying value of the net assets of SD that you dispose. Additional information 3 is saying that the finance costs include interest on long-term borrowing. The effective rate of interest equated the coupon. DF and one of these partly owned subsidiary paid dividend during the year, but we are not giving the amount, so we have to look for we have to look for that what is the dividend that you receive during the dividend that you receive during the year. What is the dividend that you receive during the year? So this is fine. What we just need to what we need to do now is that let me share my entire screen so that everybody can see. So now let's now go now. And once you are giving any question on cash flow, I want you to please try as much as possible to determine the cash and cash equivalent at the end. Try as much as possible to determine the cash and cash equivalent. What is the cash and cash equivalent at the beginning? Cash and cash equivalent at the beginning, so that we're able to get the cash and cash equivalent at the end. So that if you're able to determine the cash and cash equivalent at the beginning and the cash and cash equivalent at the end, we're able to know what is the changes during the year. What is the changes, whether there's an increase in cash flow or there's a decrease in cash flow during the year. So you need to try and get what is the cash and cash equivalent during the year, what is the cash and cash equivalent at the beginning, and what is the cash and cash equivalent at the end. That is very, very important. Once you're giving any question in cash flow, before you start, make sure that you're able to determine what is the cash flow during the year, what is the cash flow during the year, what is the cash flow at the end, and what is the cash flow at the beginning. Please don't forget. What is the cash and cash equivalent at the end? What is the cash and cash equivalent at the beginning? So that the difference between the beginning and the end now, that is our cash and cash, the increase or decrease during the year. Let's say, for example, now I end with the cash and cash equivalent at the end is 200. And at the beginning is At the beginning is 150. It means that the changes now is The changes now is 50. If I started with 150 and I end with 200, it means that the cash flow has increased by 50 during the year. And which indicate that if we had your operating activities, your investing activities, and your financing activities, you must have this 50. You must have this 50. So try as much as possible to know what is the cash and cash equivalent at the end, what is the cash and cash equivalent at the beginning, so that we're able to determine the changes. I'm using this as an example now, that the cash flow at the end, the cash and cash equivalent at the end is 200. At the beginning is 150. So it means that the changes in cash and cash equivalent during the year is 150. It's 50. Okay. So let's go back to the question and determine that. You know already that this particular question is on disposal. That is fine. The next thing that you have to know now is that, what is the cash and cash equivalent at the end? What is the cash and cash equivalent at the beginning? And in this particular question now, the cash and cash equivalent, because if we look at the liability, and I'm very sure that every one of us will remember this, that this is your cash and cash equivalent schedule. Let's say this is 2017. This is 2016. You are going to have your bank. You can have your cash as well. Another thing, you can also have your short-term investment. And I know that some of us will still remember this from our FR Then we can also have what? Bank overdraft. So which you are going to remove. So these are our cash and cash equivalent what? These are cash and cash equivalent schedule. Okay? These are our cash and cash equivalent what schedule. So once you know that, oh, this is a group cash flow now, this is the final level. Now, oh, you are giving a cash flow now. Just look at the requirement first. Oh, it is cash flow, that is fine. If it is not cash flow, you now need to fall back now. Oh, it is on which type of cash flow? Is it on acquisition or is it on what? On disposal? Is it acquisition or is it what? Disposal. So once you're able to determine that, oh, maybe it is on what? Acquisition or it's on disposal, the next thing that you have to do is what? Determine the cash and cash equivalent at the beginning and at the end. So in this word now, in this particular question now, there's no overdraft, there's no short-term word, there's no short-term investment. So the only cash and cash, this is the cash and cash equivalent. This is the cash and cash word, this is the cash and cash equivalent. So the cash and cash equivalent here now, the cash and cash equivalent is what? At the end is 8,000 what? Is 8,950. And at the beginning is 12,300. So if you now had your work, if you had your operating, if you have your add your investing and financing, what is the changes now? Anybody please unmute yourself. I end with what? 9,000 what? Sorry, 8,950. And I started with what? 12. So what is it? There's a decrease now, which that one is sure. What is the decrease now?
3,350.
3,000 what? 350. So that means that there's a decrease in what? In cash flow now by what? 3,350. Which indicate that what now? If you had your what? Your operating, your investing and financing, you must have this negative of what? 3,000 what now? 3,350. If you don't have it, don't change it. Maybe we are the one that made the mistake, or maybe there's a little mistake in the what in the question. But this is just what the truth. I started with what? 12,300, and I end with what? 8,000 what? 950. So it means that the what is the changes? What is the movement during the year? It means that cash flow as what now? There's a decrease in what? In cash flow during the year. There's a decrease in cash flow during the year by what? 3,000 words, 3,350. Okay. So you know that already now before we start. So now let's start this question now. One, this is the two things that I want you to please don't forget. If you have any question at this level, try as much as possible to determine that, oh, this particular cash flow, is it on acquisition or is it on what? Is it on disposal? This particular question is on what? Is on disposal. This is what the first step that I want you to take. The next step, which is now the B part now, is what? Determine the cash and cash equivalent rate. Oh, this is at the word at the beginning. This is at the beginning, 12,300. And I end with what? 8,000 words, 950. So that means that cash flow there's a decrease in cash flow during the year by 3,000 words, 3,350. So meaning that what now? If you had what now? If you had your operating, your investing, your financing, you must have this. So now let's start with this question now. That was no time, please. So please, if there's any question at the end of the day, at any time, please, our exam is very close now. So maybe this topic that I'm taking you now, you may not really have time to go back to it again. So just once you get it here, that this is not a very what, cash flow already. It's not really a big deal. So what's our before tax? Our profit before tax is 6,570. Additional information it is given. There was no disposal of PPE. I don't worry. And when you are preparing, well, please don't forget, I inform every one of us at least that when you are preparing cash flow is divided into three. You know this already. I'm sorry for saying this again. You know this. That cash flow is divided into three: operating, your investing, and your what, the finance. I also make mention of what, if you are preparing what, each of these three information, there's a way, or where are you going to get the data from? If it is from what, operating activities, I make mention of what, if you are preparing cash flow from operating activities, the information will come from what? Statement of profit or loss of the current year. Don't forget, statement of profit or loss of the current year. If you are giving what, statement of profit or loss in comparative, you are not going to look at last year. You are only going to look at what, this year. Please don't forget. This is what, the income statement of 2012. Assuming that you are giving income statement of what now, of 2011. You are not going to look at that 2011 at all. Please don't forget. You are not going to look at the what the last year was P or L. You are only going to focus on the what, on the current year. If you are preparing your work, that is number one. If you are preparing operating activities, you need to get the information from what, POL of the current year. The next place is what? The additional information. The third place is what? Is your current asset and your what, and your current liability. Operating activities, where are you going to get the information from? The POL of the current year, the additional information, your current asset and your what, and your current liability. So I'm going to the what, to the additional information now. They say that there was no disposal during the year. There was no disposal of what, PPE. But if you look at what now, there's a movement in your PPE. Your PPE last year was what, 14,400. Now it is what, 46,410. So that means that there's a what now, there's acquisition. But I don't need this now. I don't need this because it is when I'm preparing what, investing activities now, that I can be thinking of that. The only thing that I need now is what, is a depreciation, and which is given to be what, to be 31. Then the next one is what? The next one. The next one is what? Let's say DF dispose his entire what, holding in SD on October 1, 2012. For how much? For 8,140. It had acquired the 100% holding in 1993. And the associated goodwill on this acquisition, the goodwill on this acquisition has been fully written off in 2010. Which year are we in 2012? Okay, that's fine. The gain on disposal of SD has been netted off against the what? The administrative what? Against the what? The administrative what? Expenses. So I hope everybody understands this. It means that what now? Let's say, for example, your admin is what? Let's say your admin is 2,000. And the gain when you dispose is what? Let's say the gain is what? Is 500. So that it now means that you are now saying that your administrative expenses now is what is 1.5. That is the interpretation. They say the gain on disposal of SD has been netted off against the admin expenses. And the tax charge on the gain is included within the word income tax. So just say, for example, just like you have a CGT, your capital gain tax. And that one occurs when there's a you dispose a chargeable asset and there's a gain. So the gain that you now have on disposal, the tax, you also include it in your income statement. That is the interpretation. DF made no other purchase or sales of investment during the year. So the next thing that we now need to do now, you can see now, they say there was a gain. We are saying on additional information 1. DF disposed his entire share within SDE for this amount, which is 8,000 in 2012. Now, what we now need to ask ourselves is that, okay, what is the gain? You can see this question is straightforward. It's straightforward in terms of what? The examiner is telling you now in this question that there's a gain. If the question is silent, you have to be thinking of 2 things. If the question is silent and there's a disposal, you have to be thinking of what? Oh, whether the what now? Whether there's a gain or there's a loss. Once you dispose your subsidiary, we are talking about what? Disposal now. When there's a disposal, there's what you're going to have to think. Is either there will be gain or there will be loss. So this information now is already informing you that there's a what now? There is a gain. Okay, if there's a gain, what is now the amount? Abi? That's the next thing that we need to ask ourselves. The question is telling you now there's a gain on disposal. If there's a gain on disposal now, how much is the gain on disposal? That's the question that we need to ask ourselves. What is the gain? What is the gain on disposal? What we are now going to do now, look at the financial statement. The financial statement is showing that there's a goodwill last year of 7.2, and there's a goodwill this year of 7,000. So that means that there's a word now. There's impairment of goodwill. Let me even recognize that first. I'll just say what now? Impairment. So I'm adding it. Another thing that you also need to think of, if you go to their income statement, look at this. And thank God I was the one that took you what IS-12. Sorry, IS-28. Look at this. Associate. There's also an associate profit of how much? There's also an associate profit of 2.1. The profit on associate now is not from our core business. So I'll also add it back. You also have finance costs, 1,350. You know already. We're also going to add finance costs back. We are still going to subtract or do some adjustment relating to it. This is 1,350. And you know that the share of a profit, this is share of associate profits. You know that it is already included here because your POL could have been credited. So if it is profit, you do what? You less. If it is loss, you what? You add. This depreciation is already subtracted from K. We are adding it back. This impairment of 200 is already subtracted before you have this data on 6,570. Sorry for the network break. Please hold on. This, let me make some people some calls so that's. So now, please, can you hear me back now? Sorry, can you see my screen as well? Joseph, please, can you hear me?
Yes, sir, we can hear you and see your screen.
All right, so let's continue. So the next thing that we now need to ask ourselves, which is the big, all this one, we are not stressing ourselves to get it. Everything is already given in the question. Then the next thing that we now need to work for is gain on disposal. Gain on what? Gain on disposal. Gain on what? Gain on disposal. What is the gain on what? What is the gain on disposal? So how much do you sell it? That's the number one thing I need to ask ourselves. How much do you sell it? You sell it for what? 8,140. What is now the carrying amount of this word of this particular investment? What is the carrying amount of this particular word investment? What is their carrying amount? When you sell, their carrying amount is this. This is their carrying amount. Their net asset. This is their net asset, which is what? 4,400. And which the net asset, whether it is on acquisition or it's on disposal, it is always going to be given to you. It is always going to be what to be given. So you just need to take it from the word, you just need to take it from the question. So if I say what 81 now, minus 44, then I have 3,740. And which is a what is a profit. So I'm subtracting it. And that's all. So what is now the total number we have? That's all about what? That's all about it. So that we're able to get our cash generated from what? From operation. Or sometimes we call it what? Cash flow, net cash flow. Before what? Changes in what? Before changes in working capital. So that's just it. What is the total that we have, please?
Minus negative 1190.
Negative
1190.
Okay. Please, hold on. Negative. Okay. 1190, right?
90, yes. 1190.
1190. 90. Okay, thank you very much. So minus, I'm sorry, minus 6,570.
5380.
5380. Okay. So what is our opening inventory? 36,000. This is 100. 2,200. What is our P? These are P. So what do we now have, please? Please, are we all together, please?
Yes, sir.
So the next thing is what? What is our tax paid? And what is our what? Our interest paid. So now let's look at, you can see, if you look at this liability section, this current liability, you can see we only have two information about this. We only have what? Trade payable and income what? Income tax. If you look at the statement of what, look at the statement of P&L, you can see we have finance cost of what? 1,350. So what it means is that this is the interest, this is the interest that is what? That is due, and you have what? You have paid for it. Due and what? And paid. Because you are not having any interest in your liability, so it means that you are not owing any interest during the year. So what you had at the top, we also come and subtract it here. So I'll also say what? Minus 1,350. This is the 1,350 that you added. This is it. Finance cost is the same thing as well as interest. Don't forget. You have added it here. You also come down what and subtracted. Why? Because there is no any interest in your liability. So it means that what is due, it is also what you paid for. What is due, it is also what you paid for. So you are not owing. Let's now go for the word for the tax. And please, can anybody try what is the tax paid? Let me hear from everyone of us. Because this is not the first time that we are coming across cash flow. The way you are going to do this tax is still the same way that you know what you want at the FR. So what is the tax paid now? Anybody? This is a full screen. I know that some of us have this question before. What is the tax paid? Anybody? So please, 1 minute. Please use your calculator. What is the tax paid?
So please, can we see the income tax expense on the POL?
This is it.
So the tax paid is 27.
Okay. Thank you very much. Let's see. And let me do it here. Okay, don't let me use the T format, yeah? So I'll just say opening. Opening is what? Opening is 2,700. What do you have in the what? What do you have in the POL? In the POL, we have what? Tax in the POL is 3,800. So plus 3,800. What is expected? This is how much, sir? 6,500. Then what is our closing balance? Our closing balance is what? Is 3,800. Our closing balance is what? Is 3,800. So 6,500. So the difference is now what we call the what? The tax paid. And what is that much, Joseph?
2,700.
2,700. You are also an accountant, but it doesn't matter. Anyone that you're convenient with in the exam. This is the T format, tax. This is the opening. Tax is the liability. So I'm having what? 27 here. What is the closing? The balance brought down. The closing is what? Is 3,800. So the 3,800 will be here, which is the closing. This is the balance brought forward. What you have in your POL, what you have in your POL, you know, POL could have been debited. The corresponding entry is what now? The corresponding entry is what you need to credit the tax. You debit the POL credit tax of what? Of 3,800. And when you add everything together now, you're going to have 6,500. You're also going to have your what? Your 6,500. So 6,500 minus what? Minus 3,800. You're still going to have what? 2,700, which is the what? Which is the tax paid. So whatever it is, what it is convenient for you, either the was use the double entry or use the normal vertical, it's still the same thing. Examiner is not what we are not differentiating solution of someone that is using ledger and someone that is using vertical. It is the same under cash flow method. If you know that you really understand double entry very well, I think this T format will be better. But if you know that you don't understand double entry very well, at least you go for this. You just say opening, what happened during the year, get your expected, what do you close it? The difference will be your what? The difference will be your tax paid. So the tax paid here is what now? Is 2,000 was 2,700. Thanks. So what is now our net what? What is our net cash flow? What is our net cash flow from? So net cash flow from operating what? From operating activities. So what do we have in total now? Starting from 5,000. Is 5,380 plus 19 minus 27 minus 1,350. We have 3,230. So, and that's that. Please, do you understand? Everybody, is there any question on this? The only thing that is new to you in this question is this one. I don't see there's anything that is new to you except what this gain on disposal. And if there's a gain on disposal, so you are aware of it before. If there's a gain on disposal, you had. If there's a loss, you do what? You subtract. So it's not, but the only thing is just the sentence that, oh, this one is on disposal. How do you calculate gain on disposal before? It's still the same mentality. So to me personally, I don't see anything new in this question. In what, even in group cash flow, the only thing that may be new is this associate profit. Because we don't usually have this in a normal what FR what cash flow. So when you are preparing what now investing activities, what are you going to focus on? You are going to focus on what non-current asset. Please don't forget. You are going to focus on what non-current asset and what additional what information. You are going to focus on what non-current asset and what non-current asset and what additional information. This is where you are going to focus on when you are preparing your investing activities. Non-current asset and what and additional information. Okay. What is our non-current asset last year? Our non-current asset last year is 44,400, and this year it is what 46,710. So it's given an indicator that there was addition. And you're already giving information that, oh, there was no disposal during the year. There was no disposal during the year, because if your non-current asset change, it may be as a result of two things. There may be addition and there may also be what? Disposal. So, but in this question now, it's already informing you that there's no what? There's no disposal during the year for what? For property, plant, and what and equipment. So I cannot say my working one now. opening is what? 44,400. When you dispose of, what is the PP? You remove it. You know, if you remember the question that we solved on what acquisition, you are going to add. Assuming that this particular question is on what now? Acquisition, I will add this 2,000 what 400. But since it is on what disposal now, you subtract it. What is our depreciation? That we are giving that depreciation. Look at it here. Depreciation is what is 3,1. So what is now our expected? What is our expected balance for PP? Then what is now our closing balance? Our closing balance for PP is 46,710. So what's our expected? We have what? 44,400 minus 24 minus 3,1. We have 38,900. So acquisition now minus 46,710. So that means that there was acquisition of what? 7,810. Hope everybody understand this.
Yes, sir.
So this is the word, the acquisition. So just go back and say what now? Acquisition of what? Of PP. So, and that's that. Then you're also going to say what? Disposal. If you remember your word, sorry. If you remember your word, the first question that we saw, we are going to see here, acquisition of what? Acquisition of Saul. So disposal of what? Saul. How much do you receive? I sell it for what? 8,000 words, 8,140. And I think I still remember. This is the price. It's 8,1. This is the price. This is what I'm referring to. 8,1. But you also have some words, some cash and cash equivalent. If you remember, you know, they are opposites. And they are opposites. If you remember in acquisition, you know, we say what is the net cash that is what that is going out? What is the net cash that is going out? This one is now what? What is the net cash that we are receiving? What is the net cash that we are receiving? Oh, I'm selling it for what? I'm going to receive what? 8,140. But I'm also giving out how much? I'm also giving out 200. I'm also giving out what? 200. So minus what? Minus 200. And this will be 7,940 as the inflow. If you are with your word, the same word, if you are with your note now, help me to scroll back to the word, to the question that we solved now. You are going to see what? Acquisition. We are going to see what? Acquisition. And it is on what? It will be in bracket. We are going to say, okay, this is the amount that you pay. And this is the amount of cash that the subsidiary also have. So what is the net that you pay? This one is the word. What is the net that you receive? Please, do we all get what I'm trying to say? Please let me hear from everybody, maybe in the chat box. Do you understand? At least we
Yes.
are many here. On Dira, do you understand what I'm trying to make reference to? Austin, do you understand? I mean this call.
Yes, sir.
All right, now, thanks. So let's continue. So what else again? How much do you receive from the associates? So we need to do what we call what? Dividend received from what? Dividend received from associate. It's still the same format. Please don't forget. You do what? Dividend received from what? From associate. Let's say that's our what now? That's our working two, which there is always going to be. There's always going to be, whether it is on acquisition or is on what is on disposal. Okay. So dividend received from what now? Dividend received from associates. Dividend received from associates. The first thing that who can remember, how do we do this in the last class? Can you remember? Because it's still the same process. How do you use to account for associates in our working Cs when we do IS 28? Don't worry, don't stress yourself. You just say what? What is the balance that you have last year? Which is in your statement of financial position. Associate last year is what? Associate last year is 23,400. 23,400. 23,400. Then the next one is what? What do you have in the what? In the P&L? How much do you recognize as profit from associate during the year? Your P&L. You go back to your P&L, you recognize how much? You recognize this. You recognize 2-1. So I'm going to say what now? 2-1. So that I'm able to get my what now? What is my expected? So if you say what 23,400 plus 2-1, then we have what 25,500. 25,500. So then what's your closing word? What's your closing balance? So this is our word now. This is our expected word. This is our expected balance. This is our expected word balance. Then what is now the balance of the word of the associate now? What is the balance of the associate? We just go back. We close with what now? We close with 24,400. 24,400. So the difference is the what is the dividend. So minus 24,400. Then we have 1,1. So that means that you receive a dividend of what? And that's just it. So even though you don't have any words, you know this already. If you remember in the normal cash flow, we used to check that, you should check whether dividend was paid or dividend was received. If dividend was received, it will be in your investing activities. Although IS7 also permit that dividend received can also form part of your operating activities. But dividend paid can either be in your operating activities or in your financing activities. Dividend pay can either be in your operating or in your financing. Just like interest. Interest and dividend, you have the option of taking it to either your investing your operating activities or your financing activities. Dividend paid and interest paid. Dividend paid and interest paid. You have the option of either taking it to your operating activities or your financing activities. But dividend received most of the time to form part of our investing activities. Because for you to receive dividend, it means that you have investment. But IS7 also allow that dividend received can also form part of our operating activities. So whatever you want, whatever the perspective that you're taking at or you're looking at it from. But basically, I'll prefer it to be included in the investing activities. So how do we check for dividend if dividend was paid? If dividend was paid, we used to do that from our retained earning. I will just say this is the retained earning. What is your balance brought forward? What is the profit afterwards? The profit after tax. Then we'll get our expected. What is the closing retained earning? The difference will be what? The difference will be the dividend. So let's say, for example, now I'm having 2,000 here and I'm having 1,500 here. So it means that dividend of 500 was paid. Even though the question is silent, you still need to check that what is the retained earning of last year. Add it with the profit after tax of this year. If it does not if it is not the same with your closing retained earning, it means that dividend has been paid and which you are also going to recognize in either your operating activities or your financing activities. So dividend that you receive from the associate now is 1,1. Then you come here and say 1,1. And this one is acquisition, so this money is going out. And that's all about it. Investing activities are usually very short. Because where are you getting the information from? Additional information and non-current assets. When you acquire, this is the amount. Disposal of the subsidiary, you dispose it for how much? What you receive is 8,001. And this particular subsidiary is also going with some cash. So you recognize the net and you receive a dividend. So what is not the net now? Plus 940 minus 7810. We have 1,230 as the inflow. So these are now? Our net cash flow from investing activities. And that's just it. The final one is on operating. Oh, sorry. Final one is on financing. And when you're preparing your financing activities, I know some of us will still remember, where are you going to get the information from? If you are preparing financing activities? One, non-current liability. Two, additional information. And number three, equity. And in the equity, you are only looking at what? Ordinary share and what? And share premium. When you are preparing your financing activities, you need to take care of your non-current liability, your additional information, and your equity. In your equity, you are only interested in the ordinary share and the share premium. Okay. So what is let's start from the non-current liability. Last year, long-term borrowing was 48,000. This year it is This year it is 42. So that means that there's a now? There's a repayment of long-term borrowing. So I'll just say what now? Repayment, long-term borrowing. Last year it was 48, and this year it was 42. So that means that you have paid. So this 6,000 naira now is outflow. So, and that's all about that's all about the long-term liability. We also need to go to the next place where we are going to get the information from, which is equity. Where are we going to get the information from is equity. So last year, your share capital was 30,000. So this year is now 42. So it's indicate that there is a now. There's issue of now? There's issue of shares. It indicates that there's now? There's issue of There's issue of shares. That's just it. And there's no share premium. So we can just do the difference by saying this one is 12. This one is 24. Abi? So that means that there's changes of now of 14,000, but you will not look at it in that way. You have to go to is there any additional information that is supporting that? And if you look at this, look at the last additional information. The last additional information is saying that there was a bonus issue, and that's why I'm asking you not to look at it this way. By just saying that ordinary share has increased by 12,000, share premium is 24. No, don't look at it that way. Because the reason why you will not look at it that way is because of bonus issue. Because when it is bonus issue, the shareholder will not pay. The shareholder will not The shareholder will not pay. Bonus issue is is free of charge. Bonus issue is free of charge. You are not paying for it. So let's look at additional information. 5. DF made a bonus issue to all shareholders on January 1, 2012 at 1 for 3 for every For every 3 currently held. So what we are now going to do is that what is the value, and your nominal price is 1. The share that you have last year is what? You have a share of 30,000 last year. Okay. Please listen to me very well here. You have a share of last year. Let me say this is what ordinary share. The balance brought forward is 30. I have done something like this before too. The balance, and you now made it what? A bonus what? A bonus issue of 1 divided by 3 multiplied by 30,000. How much will be that? Is that not 10? Abi? That's 10. So I'm having what now? 40. This is our expected. And you close with what? You close with 42. You close with what? No, sorry. Yes, you close with 42. So you close with what? We are expecting you to have what now? 40. And you close with what? You close with 42. So that means that there's issue of shares of how much now? There's issue of shares of 2,000. So apart from the what? Apart from the bonus issue now, there's what now? You also issue a share. And you can also see DF utilize retained earnings for this purpose. So that means that what? This bonus issue is usually being financed from share premium. Bonus issue is usually financed from what? It's usually financed from share premium. But this particular company does not have share premium as at last year. And that's why they are giving you this information that it was financed from what? It was financed from retained earnings. Usually financed from share premium. But this company does not have what now? This company does not have share premium. This company does not have share premium. So that's why they are financing it from what? From retained earnings. I hope everybody understands that. So I can say now that issue of what? Issue of shares is what now? Is 2. Share premium. That means that the share premium that you have here, this share premium of what? This share premium of 2.4, it comes from what? This fresh issue of shares that you do. I'll just write what? 2.4. Okay, that's everybody, please, you understand this? This is what you are expecting towards. Since this is your balance, 30,000. And you do a bonus issue of 1 for 3. So 1 divided by 3 multiplied by your existing share capital before. You have 10. That means that we are expecting you to close with what now? 40. You are now closing with what? With 42. So it indicates that there's a what now? There's additional what? Issue of shares of 2,000. And you can even see the information is there already. DCF subsequently issue what? Share at what? At full market value. So that means that what? This information is also even there. That what? You issue a share at what? At full market price. And when you issue a share at full market price, we are going to issue the share at what? At premium. Meaning that what is going to be more than 1 naira of that your nominal price. And if you issue shares above the nominal price, so that means that what you give rise to what? To share premium. And that's why you are having share premium in this what? In this year financial statement of 2,400. Okay. And that's that about it. The next thing that we now need to ask ourselves is that there are two very important things. If you remember the format which you have with you, the format of what? Of group cash flow, is that what you need to now look for dividend. Dividend to how many parties? Dividend to two parties. There can be dividend to NCI, and there can also be dividend to what? To parent. You have to check for that. Dividend to parent and dividend to what? To NCI. Dividend to parent and dividend to what? Dividend to NCI. And let me do that here now as working now. Let me say dividend. Let's check. It's not a must that you have to be what? You have to have a dividend, but you need to check for it. If the expected is what? Is the same with the closing balance, it means that there was no dividend. No dividend was paid. But if there's a difference between our expected and the closing balance, it means that dividend was what? Dividend was paid. So I will say what? Dividend to what now? Dividend to NCI. Just like the way you do actually that one. The next thing is what is opening NCI? Go back to the statement of financial position and look for it. Non-controlling interest, this is it. And this is their figure. Non-controlling interest is opening is what? 18,800. I'm sorry, 18,300. That is the open. Then you're not going to say what? Share of profits. Or you say what? P or L. You go back to the P or L. What is the attributable profit to what? To NCI? It will be given to you. And you can see it here. Profit attributable to what? Owners of parents and what? And NCI. NCI is what? Is 610. Then what is our expected? What is the closing balance of NCI? The closing balance of NCI is 16,500. So it means that what? The difference is the what? The difference is the dividend. It's true. 910 minus this is 410. So dividend to NCI is 2,410. The next one, which is the final. And I will tell you the difference between normal cash flow and group cash flow. Normal cash flow and group cash flow. This is for dividend paid to parents. And this one is in terms of their what they are retained in. Oh, sorry. Sorry. So if you want to check, for what for dividend pay, you look at it from the angles of the word of the retained earnings. From the angles of what? From the angles of retained earnings. If you want to check whether dividend was paid to the what the parent or not, you look at it from the angles of what of the retained earnings. What's the retained earning last year? Because you know the retained earning now belongs to the parent, right? What is the whole thing? And you say what? Share of what? Share of profit. What is the share of profit the current year? You go back to their income statement. What is the profit that is allocated to what? What is the profit that is allocated to the parent? The profit that is allocated to the what? The profit that is allocated to the parent is what? 2,160. 2,160. Now, there's one information that you have to be very careful of. Look at this last additional information. They say what? DF utilize retained earning for this purpose. So meaning that the bonus issue, how do you finance the bonus issue? It is here. You finance this bonus issue from what? From share premium. You finance this bonus issue from what? From share premium. So this money now, you finance it from what? You finance it from your retained earnings. Sorry. You finance this bonus issue from your what? From your retained earnings. They say DF utilize retained earning for this word, for this purpose. DF utilize retained earning for this purpose. So meaning that this 10,000 naira was financed from where? We finance it from the retained earning. So I'll go to the retained earning now and say what now? Bonus issue. I'll remove that 10,000. Because this money you finance it from bonus, you finance it from retained earning. So what is our expected? Most of the time, even in practice as well, bonus issue will be financed from what? It will be financed from share premium. But you can see in this question now, there was no share premium as at last year. So this particular bonus issue was financed from their what? Was financed from their retained earning. So 21, sorry, plus 2,160 minus 10,000. We have what? 12,260. Now, 12,000 what? 260. 12,000 what? 260. What is now their closing balance for retained earning? The closing balance for retained earning is 10,260. 10,260. These are closing. So the dividend pay was what? Was 2,000. The difference between normal cash flow and group cash flow is this. Associates dividend paid towards dividend to NCI and dividend to parents. That is the difference between what you know before at FR and what you are learning at this CR level now. This is the, whether it is what is on disposal or it is on acquisition, it will be straightforward. It's not something that will stress you. It's not something that will, it's not something that will stress, no. And we also made a mistake here, which I can see now. I'm only taking care of the parent and the parent and the parent, but the subsidiary as well is also part of the group. So which it need to be what? It need to be removed. So there's a word now, there's a mistake in what we are doing here. All these things are wrong. Let me delete everything. And this will be wrong as well. So we agree it will be the parent, and since it is the word disposal now, I'll remove that of the words, I'll remove that of the subs that we are selling, because this is a consolidated with financial statement now. So the subsidiary that we are selling as well could have been added to this place, to this particular amount. So we need to net it off. Okay. When you dispose, what is their net assets? Their net assets, we also need to take care of this picture, but let's do the working capital first. Inventory is 36. So we are going to say what now? We are going to say minus 3,600, which is that of the disposal. Receivable is what? 2,000. Their payable is what? Their payable is 38. Then we now need to remove the closing balance of the word of the parent. You go back again. Payable of this one is 33.1. Inventory here is what? Receivable 28,200. Inventory here is 34,800. So what do we now have? And you can even see, what about the PPE? Okay, you can see what we did here is what is fine. Assuming that it is on acquisition, we are going to add. Since it is on disposal, we are going to less. If you look at the question that we solved, at least every one of us should be able to remember the question 1. We can see that we are adding the sub that you are buying. But here, since it's on what disposal now, you remove it. Okay, so what's the balance that we have now? If I say 36,000 minus 36 minus 34,800, we have 2,000 words. We have 2,400. We also go again by saying 26,400 minus 2,000 minus 28 or 200. You have what 38. And the last one, 3,600 minus 3,800 minus 33,1. That will be 6,300, and it will be positive. You reverse. You know, this one we say what T R, meaning that what for all the assets, whatever you have, trust it. For the liability, whatever you have, you do what you reverse it. So what do we now have now? Please do this again. What's our net cash flow from operating now? 5,380 minus 24 minus 3 months. This is 2 minus 27 minus 1,250. Yeah, 1,050. Okay, so we are having 1,430 as your net cash flow from what? From operating. And we are having what? This as well. Then what is our financing? 8,000 plus 24 minus 2,004 minus 2,000 is 5,000. Oh, sorry. Your liability last year was 48. And your liability this year was 42. So that means that you have paid. So this one should be what? Outflow. This is what you are owing last year, 48. And now it has now what? It is now 42. Look at the word, the long-term borrowing. Last year it was 48. So if your liability is what is reducing, it means that there's a what? There's a cash outflow. There's a cash outflow because you are paying. You are owing someone 48 last year and you're having 42 this year. So it means that you have paid what 6,000, which is a cash outflow. So 4,400 minus what? 6,000 minus 2,000 minus 2. We have 6,000. So these are what now? Our net cash flow from financing. And we have determined something before we started this question, and which I always advise everybody to do. What is your cash and cash equivalent at the end? Our cash and cash equivalent at the end is what? 8,000 what? 8,950. So I'll write that what? 8,000 what? 950 here. And at the beginning is 12,300. And like we make mention earlier, that the changes is what now? 3,000 what? 3,350. Meaning what? Negative. So now, you don't change this, please, in the exam. Don't change this if it does not balance now. Although we are still in class, look at where is the difference coming from. But this is what we are looking for. This is what we are looking for. So if you had the operating, the investing, and the financing, you must have this figure. If you don't have it in the exam, leave it. It means that there's a mistake somewhere within the three categories. So now, I have what now? The first positive I have is what? 14,000 this from operating activities. And for my financing as well, I also have what? 1,000 this. Then minus what? 6,000 this. You can see we have this now. So if you had your what? Your operating, your investing and financing, you must have that figure as well. If you don't have it, it means that there's a mistake somewhere. The difference between the normal cash flow at FR and this, how do you determine dividend that was paid to the what? To the associate? How do you determine the dividend that was paid to the what that was paid to the parent? And how do you determine the dividend that was paid to the NCR? That's just the three key difference between the group cash flow and the normal cash flow. Let everybody have a look at this again and you all understand this.
Yes, sir.
All right, thanks, sir. Austin, how far?
Yes, sir.
What of Tira?
Yes.
All right. Do you have any question on this question that we showed now? And please, there's nothing like maybe direct or indirect as professional anymore. What you are going to use is what you are going to use is indirect. What you are going to use is what is indirect. So the normal cash flow that you are used to is the same with this one, with exemption of just three key things. How do you determine the dividend that was paid to the NCR? The dividend that was the dividend that was paid to the parents, the share of associate profits, dividend paid to NCR, the dividend received as well, the associate profit, that one is coming from the POL. And another thing that I also need to include is the dividend received from associate. So those are the 3-4 adjustments that you need to make. The share of associate profits, and that one will be in the income statement. What you just need to do is for you to add it back. And this question comprises of everything that you can come across in when it comes to disposal. And you can see how simple it is. It's still the same. If it is on acquisition, and this 3,600 now that you are subtracting, you had it. Look at the first question that we saw, it's on acquisition. This is it. If you check your now, if you check your if you check your movement in your movement in working capital, the changes in your working capital now. If you look at the inventory, you are going to see now. Okay, what is the inventory that we have before? The inventory here is The inventory here is 26,000. So opening is now? Opening is 26,000. We're now going to say, what is it? The subsidiary that you acquire, how much is it? You can see the fair value at the acquisition inventory is 3,600. 3,600. So I'm going to say now plus 3,000 minus what is your closing? Your closing is 28,000. Is that not what we had before? I'm adding this because this one is acquisition. This is the closing. This is the This is the opening. If you also look at another thing, which is also when you acquire this particular when you acquire this particular subsidiary, how much do you pay? They say FB acquired a controlling interest in SM during the year for how much? This is it. 6,350. The consideration comprises of cash, 350, and issue of shares. So this one is a combination of two things now. Cash is there, cash is 350, and share is what? Share is 400. So now, if you are paying cash of what? If you are paying cash of 350, and if you look at their financial statement, this particular company that we are acquiring also have what? A cash of what? 200. So I'm going to say what? Oh, the net cash now is what? The net cash now is 150. And if you check your what? Your investing activities, you are going to see this. This is a what? An outflow. But in this particular one, and this one is on what? On disposal. This one is on what? On disposal. This is the amount that you receive. But you are also giving out what? 200, because this subsidiary that you are selling now is also have a cash balance, and it's going to go with that cash balance. So that means that the net that you receive now is what? This 8,140 minus 200, and you have this. So just look at the word number one and what, and this number 3, 8, and that is all about the word, the cash flow. Is it that it is on acquisition or it is on what? Is on disposal. So whatever any question that you have here now, you can attempt it. Once you are given any question at this level, if it is cash flow, oh, look at it. You can also be given a normal cash flow self, like the one that you have in your FR. It has occurred before. You can be given the word the normal cash flow. But if it is a group cash flow, let's ask ourselves, is he on what? Is he acquisition? Or is he on what? Is he on disposal? This is the number one. Number two now is what? Determine the what? The cash and cash equivalent. What is the cash and cash equivalent at the beginning? What is the cash and cash equivalent at the closing? Oh, I started with what? 1,000. That's my cash and cash equivalent at the beginning. And I ended with what? I ended with what? 500. So what is that decrease in what? In cash flow during the year now? It is what? It is 500. If you don't have that 500, don't change it. That's the answer. So that's that about what? That's that about group cash flow. And maybe we still have time. Just take your time to look at this particular cash flow again. And maybe in 1 hour's time, we can come back to solve that what piecemeal what acquisition. And I think in the note that I also sent as well, I include that practice question. So check the PDF that I sent on what on sub and sub. We are going to see sub and what and piecemeal what acquisition, which is that Papa or Tata and what Achibi, what's their name is also there. So in 1 hour's time, let's come back to solve that one, to solve that particular question together. Is on what is on piecemeal acquisition. And please don't forget, in group account at this level, always try to get the key difference between each of the topics, because they are not the same. If it is a piecemeal acquisition, if you are coming for a piecemeal acquisition class now, you have to have it at the back of your mind that, oh, that percentage OD, you didn't acquire it at what? Once. You know, the group account of this profession is a little bit what, we call it what? Complex group. But always try to get the difference among them. They are not the same. In piecemeal acquisition now, it's just going to be a parent and a subsidiary. It's just going to be a parent and a subsidiary, and then they can include what? Associates. But how do you acquire? How do you acquire that what? How do you acquire that sub? It is not through one stage. You can acquire what? Let's say what? 20%. You now come back to acquire what? This is the first one that you acquire. You now come back and acquire what? 40%. That is piecemeal. And don't forget the principle behind it. The principle behind it is that what? I'm going to calculate goodwill on the date of what? On the day that you have the controlling interest. We are going to calculate the goodwill on the day that you have the controlling interest. Not the first time that not the first time that you acquire. not the first time that you acquire that 20%. We are going to calculate the goodwill the moment that you acquire that additional 40% to the first 20 that you have before. That is number one assumption that I don't want you to forget. The next assumption is that we are going to assume that you have disposed this 20%. You now acquire 60% outright. That is the assumption. I'm going to assume that this 20%, you have sold it. You now acquire that 60%. So there's going to be a movement. Let's say when you first acquire this 20%, it was 100 naira. But now, it is now 150. So it means that there's a movement, there's a gain. So this 50 now, if this 50 now, they are now going to do what now? They are going to add it to the retained earning. Just reverse the question that we saw. Let's take some time to rest a little bit and come back to that. So thank you, everyone. I'll share the work file as well so you can see it. Is there any question at this? All right, now, thanks, everyone. So let me share this work file, go through it again, look at the first question that we saw was one on cash flow. And later they will come back to the piecemeal position. So thank you, everyone.